In a nutshell, here's what this is about. We love our story and our strategy. It's unique, and we're hitting on all cylinders. You've seen that now for 3 years in a row, and you're going to keep seeing it. But we're not the only ones who love our story and strategy. Calpine's owners love it too. That gave us the opportunity to acquire a great company with amazing zero and low carbon assets at an incredible value. It produces immediate financial benefits for you in EPS and cash flow accretion numbers that I have never seen in 25 years in this business. We believe that natural gas and geothermal, along with nuclear, will be critically important to the nation, and that translates into great results for both our customers and for you, our owners. The transaction gives us a geographic diversity and reach, and leveraged exposure to Texas, where many of our customers are growing. But beyond that, what excites me the most is the ability to combine two great teams, the ability to see how we could put together these fleets and provide commercial synergies through new products and services that no one else can provide. And finally, this transaction gives us the financial scale to build and grow so that we can meet head-on the growing needs of our country. Calpine is the largest owner and operator of natural gas-fired power plants in the United States, with most of these being very efficient combined cycle gas turbines, or CCGTs. It's the largest geothermal operator in the United States. It's the leading cogen operator. It's got a growing and able platform of storage capability. It is a large retail provider serving 59 million megawatt hours of power to mostly C&I customers, a perfect complement to the work we do here at Constellation. And most importantly, it is run by an exceptional team, some of the best people in the industry, and we're so excited to partner with them. Calpine's low-carbon natural gas assets are not only incredibly well-run, but they are some of the newest, lowest-emitting, and most efficient in the nation. And critically for us, Calpine owns no coal. It has no residual coal plant liabilities. That means it meets a bright line in our M&A strategy and a very bright line for many of our owners as well. Like Constellation, Calpine is committed to environmental sustainability. They operate the largest and best zero-carbon geothermal fleet, which, like our nuclear fleet, is very unique. And they have created an outstanding energy storage business with a strong pipeline. Working with DOE, Calpine is at the leading edge of developing promising new post-combustion carbon capture and sequestration technology, creating a pathway that could help this country sustainably transition away from emitting resources and extend the lives of all of our existing gas-fired plants and unlock the true potential of America's abundant natural gas resources for the long term. Turning to slide 6, as I just laid out, we're buying a fantastic company. I hate the word buying, by the way. It's what the documents say. But what this is a wonderful combination. And it's thrilling to see what the combination of two great teams can do. We're going to create this largest, cleanest, reliable fleet of generation at a time when these megawatts are being recognized as premium products because they're needed to meet the growing demand for energy for our customers. We believe that the combination of the leading nuclear and natural gas platforms will significantly complement each other. This will complement and expand our ability to offer nuclear solution sets through a combination of nuclear and gas blended products and customer solutions on a scale that neither company can achieve on its own. Turning to the financial terms, we're on page 7, we're acquiring Calpine for an effective enterprise value of $26.6 billion. And we will pay Calpine's owners $4.5 billion in cash and 50 million shares of Constellation stock for an equity purchase price of $16.4 billion. Because of the strength of our balance sheet, we can do all of this without issuing any new debt or raising additional equity beyond the shares exchanged with Calpine's owners. In many respects, outside of Constellation, we believe that Calpine would have traded at the best multiples in the business had it pursued an alternate path to an IPO, all of which makes the 7.9x EV to EBITDA acquisition multiple on 26 earnings extremely compelling. Now, we've already been asked by several people this morning how we were able to reach such a value-enhancing agreement. Not to candy-coat it, I think the bottom line question is, why would Calpine's owners sell to us at such a discount? As I explained at the outset, I think the answer is pretty simple. Calpine's owners equally believe in the value creation potential of the combined company, as evidenced by their willingness to transact in mostly stock and their commitment to remain owners for a period of time. They did a lot of work on us, and clearly they liked what they saw. I said earlier that this was a lifetime opportunity, once-in-a-lifetime opportunity for Constellation. And in many respects, I think that is equally true for Calpine. We're especially delighted to work with the Calpine team. It's been a pleasure for me to work with Andrew Novotny, and I'm so super excited that he's going to join the Constellation team as an executive vice president of Constellation, and he'll remain president of Calpine. I got to spend a lot of time with Andrew, and he's an incredible leader and an incredible person. We're excited to have Andrew and others from his management team join our strong team here at Constellation. Now, I touched upon the tremendous EPS and free cash flow before growth that Calpine will add on the previous slide. But importantly, with the acquisition, we will keep all that we've had. We will maintain our 13% compounded base EPS growth rate through the decade, and Calpine will be additive to our base earnings. We've previewed the transaction with the rating agencies and expect that both S&P and Moody's will affirm our current ratings. We plan to return to our target credit metrics by the end of 2027, and we will use the cash flow generated by the business to pay down some of the debt we are absorbing with Calpine. We have several needed approvals for the transaction, with the significant ones being the Department of Justice and FERC. We intend to take a proactive approach to resolving any potential market power concerns with the divestiture of assets. Given the strong interest in generation assets in the market today, we are very confident that there will be considerable interest in the assets we need to divest and that we will receive a fair price. We're combining the largest nuclear fleet in the country with the largest natural gas fleet, and will generate more electricity than any other company in the United States. We're going to have more than 60 gigawatts of capacity from nuclear, natural gas, geothermal, wind, and solar, an 80% increase to Constellation's capacity capability. These plants will produce an industry-leading 308 million megawatt hours of electricity every year, and that's before we bring back Crane, that's before we implement the upgrades, and that's before the growth that we anticipate. Constellation currently provides 10% of the nation's emissions-free energy, and the inclusion of Calpine's geothermal fleet will add meaningfully to that. Together, we're going to produce 183 million megawatt hours of clean, emissions-free energy, and we will continue, post this transaction, to be the lowest carbon intensity of any large generator in the United States. Take a look at that, folks. Bottom line here is, post this transaction, we're the biggest fleet in the country, and we will continue to be the cleanest fleet in the country. Big deal here. Turning to slide 12, our North Star is to add complementary people and capabilities when it makes Constellation better able to serve its customers, from individual families to the world's largest businesses. That is where this transaction really shines. The combined company footprint will span the continental United States, giving us an unparalleled coast-to-coast presence. It'll enable us to offer our energy and sustainability to products to more customers and positioning us to be truly a nationwide partner for all customers. Now, I'm not saying we are going to win everything coast-to-coast. We can't. But I think what this transaction does is puts us in the customer conversation in every region of the country that's competitive. And that's exciting because what it does is it transitions relationships with customers from transactional to truly strategic, where we could serve in multiple markets and give them multiple options. Turning to slide 13, the combination creates substantial market diversification. It moderates our reliance on PJM, and it expands our presence in Texas, the fastest growing power demand market, and in California, where we've been growing a customer business for the last couple of decades. As you all know, we really like the business we built here at Constellation. I love it. But look, if I'm going to be honest, what we didn't have is enough exposure to Texas, which has been the fastest growing market in the U.S. It's been our place where many of our national customers have grown, and they want to continue to grow. We've tried to address this need at Constellation by growing our generation business in Texas. You all saw that with our SDP purchase, right? That's what we were trying to do, get bigger and scale up in Texas. But we couldn't do it fast enough. Through this combination, our owners will have better upside exposure to growth in Texas, will diversify geographic risk, and as I said, we're going to be better able to meet the needs of our customers.